Hi, it's Greg, and I'm here with your Daily 5. So, today I want to talk a little bit about the US dollar. And one of the things that's important to note about the dollar is it's not uncommon for it to flip around year end. So, here we have it going sideways for most of the month of December and just working its way lower. And all of a sudden, in one day, we've literally moved all the way to the upside closing range for December. So I want to keep that in mind because if we're trying to go long a lot of the commodity profile stuff, it might have trouble. And the other thing, things that didn't work basically since the dollar bottomed. The dollar topped in late October. That just happens to be when the stock market finally got a bounce off the bottom. And so if all this is going to revert, we might find that the New York Composite is under more pressure than it has been, and we might get a little bit more follow on from the NASDAQ. So we'll see how that goes. But it's one of the single biggest issues for people who are not U.S. domiciled, and when they trade, everything they look at is through the lens of the dollar. So we've been seeing emerging market currencies go higher, and in the newsletter on the weekend for the year end, one of the things I mentioned was that the Canadian dollar, the Aussie dollar, the euro, I didn't mention the pound, but it is of the same ilk, that if all of these currencies are going to start to trade, that's a big deal. So if they're going to break their trend lines, that's a big deal. I don't think they do, actually. I think the US dollar gets a bounce here. And one of the reasons that I want to talk about this specifically is when you look at the US dollar, you can see here how many times it's reverted around year end. Even this one was a reversion, but it was a pretty slow grind. But anyway, it doesn't have to happen, but it's a great place to look. And we just happen to be sitting right on this horizontal support and resistance line. So if the dollar has taken a 3-month pullback, comes down and starts to accelerate higher, I think that's a great place to look for trades that might start changing around the dollar. So draw your trend lines, make sure that if you're starting to see some stuff US dollar related start to flip, like all of the EWG and all of those kind of ETFs, they might start to change. So this is a Canadian stock, but I think it's really an important there's some clues on this chart that are really critical for people to understand, and one of the reasons I wanted to bring it up. So this is Tourmaline Energy, basically a really smart guy running the company, and it's mostly natural gas. In some of the most prolific natural gas fields in Alberta, they have coastal access in California where natural gas is very valuable. But what you see is the scooter ranking tucked right up against the top for a long time. And in December, this started to change and started to break down. And the relative strength compared to the S&P 500 has been going up pretty much for two full years. I've just drawn it here as a 9-month trend line. But what you also see is that it was struggling to get through this $81, $82 level. And so it was starting to break here. And for me, that's a real caution sign, like why is something that's been outperforming, and obviously I could draw a trend line up here, but you get the idea. Even without using that trend line, all of a sudden the two things that it had going for it for multiple years are changing. And so this chart is really starting to change. And one of the main perspectives I have on the whole oil trade is that if the whole world is going into a recession, and even the St. Louis Fed, I think, published a paper in late December saying that we're already in one based on their calculations. So we're heading into this recession, and this would affect demand. And so I think it's a critical thing just not to listen to the music too much, but to watch the price action. But investors have been selling this off since early December. And now here we are, it was, let's call it $82, and now we're under 65. That is a pretty big change. And so we're starting to see our great stock really change behavior. And again, we've seen this on other good tickers, but it's a good clue for us. Now here's the exploration production ETF, and I had laid out this point back in early December, point 1, point 2, point 3. And sure enough, right after I do it, it literally soars up and tries to make a new high. With the scooter ranking, price action was okay, but really what happened was everything else was falling, so this was looking pretty good by just staying horizontal. Now it started to let go. The exploration and production ETF, so not just natural gas and not a Canadian company, but we're seeing it in the US across the exploration and production. We have this beautiful trend line from December 2020, really since the vaccine day, all the way up, and now we're breaking this trend line. So I think it's an important place to be very careful with the oil and gas stocks. Um, it, I know all of the inventory data, and I know China's opening, and I know whatever else. They're selling the stocks, and the bottom line is we have to sell our stock to somebody else. So this is a good place to pay attention. Amazon down 55% from its high. So here's its high back here, 185.98, roared all the way down to 81.69. And so now it's trying to rally. And the only thing I would say on this stock is it's so beaten down that even if it got a nice rally up to the 200-day moving average, that's a pretty nice game from here. So we're sitting at around 86 bucks. This thing could go to 110, 115, 120. And there's a nice gain there. And we have a positive divergence on the PPO where it's just crossed its signal line. It's making a higher low here while price makes a lower low. It's that kind of divergence I like. And again, it's a big popular name. And normally when the retail stocks report between January and March, they can do okay. So I wouldn't be surprised to find out our good friends at Amazon give us a gift a little bit here. I've put in JP Morgan, and I got to tell you, I have worked so hard to figure out what's going on with the banks. But one of the things that happens when you look at sector rotation, and if you're in a big bear market, you leave the energy trade and you go into staples, utilities, healthcare, and then financials and real estate. But let's just call it financials for now. And then coming out the other side, as we start to enter the bull market, we should start to see breakouts happen in consumer discretionary and communications and technology. So I'm watching for that. But in the meantime, let's just say that this bear market lasted a year. This to me looks like a nice cup and handle on JP Morgan, and it looks like it's set to rock to the upside. And again, unless we get a great financial meltdown, and if that's the case, we'll have to adjust our look at the stock. But the 200-day moving average, after declining for a whole year, looks just about flat and wouldn't take much to start to turn it up. And again, price has been holding above the 10-week here since mid-October and late October above the 200-day, or the 40-week. So if this is starting to race up here, I really like the stock, and from that perspective, I think there's lots of reasons to take a look at it. Now, I did have a couple other things. If you're interested in any of the work we do at Osprey Strategic, on the homepage there's a $7 offer that explains a lot of what we do and gives you a 1-month look. And currently my strength index is only at 8%. I'd obviously like to see it get going. But that also tells me how to be invested and how strong. And if that would help you, if you don't have a reason in your trading plan for when not to be invested, there's probably some benefit to at least following the work we do. And you're more than welcome to go through the 1,000 charts that we do every weekend. But I think the real thing that you want to watch for is making sure that if we're in a big bear market, that you're aware of the change in trend, stuff like that XOP starting to break down. And when those big things are happening, that you're in tune with that, because I think it'll help you prevent a lot of losses. Now, early in January, January the 10th, we're going to be hosting a big presentation for new investment strategies for the new year, and hopefully this will work for you. But if you're interested at all, you can go to ospreystrategic.org and check it out there. And what we hope to share with you on that day is the type of work we do at Osprey Strategic. There's zero pressure. There's no, buy now for this and that. It's literally, there's a $7 offer on the website for a month. you're more than welcome to come in and take a look at what we do, and hopefully this will give you a chance to see if we can help you. But I think if, again, if finding a high in December before the market broke down, and if we could find a low around here, or maybe it's a month away, but having some tool to help us get back into the market, I think you'll find that you make a lot more money if you can miss the big downtrends, especially in a choppy market. So with that, thanks for taking the time. Happy New Year and good luck with your 2023 trading plan. If we can be a part of it for you at all, that would be great. Thanks again for watching. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.